Now, for more on the outlook for precious metals in 2013 and beyond, here's our exclusive interview with acclaimed industry insider, David Morgan. With this being the start of the new year, we felt it was no better time to bring in our friend and colleague David Morgan, editor of the renowned newsletter known as Money, Metals, and Mining, to get his thoughts on what 2013 will bring for precious metals investors. David, Happy New Year, and thanks for joining us.
My pleasure. It's great to be with you.
When we spoke to you back in October at the Silver Summit, I remember you saying you thought 2013 was going to be a strong year in the metals, but as 2012 came to a close, we had a bit of a pullback after the nice rally that occurred immediately after Obama's re-election. Do you still have the same bullish forecast for metals this year now that we've experienced that recent mini sell-off?
I do. I think the fundamentals are probably better than they've ever been. For precious metals, obviously the price has gone up substantially over the last decade or more for both silver and gold. Silver's actually outperformed gold. Nonetheless, I'm looking for silver and gold to continue the bull market.
We've been building a base for quite a while now. This consolidation period has lasted, for the better part of a year and a half, longer than probably many people would have expected or liked to have seen. But bull markets, I guess, like the one we're in, these sort of consolidation periods are not only common, but perhaps they're even healthy in the long run.
Healthy and necessary, I would say. I mean, we can talk about manipulation later, but I looked at it after the big run-up, and I was frankly a little hesitant to recommend silver above the $30, 35, particularly on the run-up in early 2011, where we made a move basically from the $26 level up to 48 with very little corrections, and it was really a spike high, a parabolic move, and there was a lot of enthusiasm in the silver market, and a lot of people, and I won't name names, and some that are pretty renowned metals analysts were telling me I was wrong and all this kind of stuff, that I was calling a top at 48, and I got within about 2 or 3 days of the exact top. No one, think anyone can call an exact top is ridiculous, but I got very close to the top. And so anyone that's trading along with me for the trading only portion of their portfolio, I emphasize that because I keep a core position at all times. It was time to take some profits, and we did. And, of course, we haven't seen that hype again. When you get the kind of a move, it does take a year and a half to, actually 2 years to work it off. I think we're about to end of the consolidation now. I do think 2013 will be a good year for the metals, not a banner year, but it will be a good year, and I do think you're going to see the $50 level tested at least once, if not a few times, during 2013 for silver, and I expect to see gold over 2000 into 2013 rather easily.
And many investors, including ourselves, might often be irritated by the apparent disconnect that we see between the paper markets and the physical market, this past month being a prime example of that, and in the face of massive paper selling, which drove the price of silver down some 10% in just a few-day period. There was significant physical buying in the retail market, and we certainly experienced that. And we're starting to see some real tightness now in some of the secondary market products, which is a good bellwether, like 90% silver coins and gold Krugerrands. And now, obviously, the bullion market is a small part of the overall market, but there's similar stories coming out of Asia where there's lots of physical buying of gold and silver bars there, and it's been very strong during the recent price drops on the COMEX. Do you see an eventual end to the paper market being the primary price-setting mechanism for metals globally, or is this sort of thing just going to continue?
Well, we'll continue until it ends, and I do expect it to end. And we've already seen a precursor to what will happen. If you go to the financial crisis of 2008, both gold and silver manifest more in the silver market than gold. Is a smaller market. But you really had two markets at that time for a brief period of time. You had the retail market that was about $13 or so when the paper market was around $9. So you had like a 30-40% premium if you were going to buy any retail silver, be it government stamped coins like a Canadian maple leaf or this is silver. Gold's premium was also substantial, but not nearly as much as silver was. And it was a very, very tight market in physical supply, yet the paper market. Now, to be fair and objective, if you were willing to buy commercial bars, you could get them at the paper price. And in fact, yours truly did. I bought 3,000 ounces of silver, and it's not the exact 3,000. It was 3 bars, and none of them weigh exactly 1,000 ounces, but rough numbers 1,000 ounces. And I basically arbitraged it, because what I did was I set up to have those 3,000 ounces converted into privately minted coins that I still have. So there will be a disconnect. No one knows when. I think a lot of silver bulls, gold bulls are kind of just waiting for that to happen. I do think it will happen. I don't know exactly how or when, but I think you will see it. And again, it's already taken place at a small level, but I think it will happen in a way that there will be a very huge discrepancy. And the first thing to look for if you want to see when it's taking place is just to watch the market closely. And when you see a backwardation, and backwardation only just simply means that the spot market, to get it today price, is higher than the next month out in the futures market, or any month out in the futures market. So, and this happens in all commodities, it's not just the precious metals. Normally it's about a 3-day event. You see like silver price higher on the spot market than it is the next month out, and the month after that, and the month after that. And usually it takes a few days, and then the market corrects, and then you get a normal contango, which means that the spot price is lower than the next future month, and then the futures months beyond that. When you see it go for a week or two, and there's some backwardation where you have to pay more for the real metal now than some future hypothetical price in the future, that will be a very, very strong signal that something is wrong in the silver market. Could happen in the gold market, could happen at the same time, could take place, again, in any market, but the metals market particularly is where I expect to see it. I do think it will take place in silver before gold, although you cannot rule out gold having the same situation.
Yeah, that'll be certainly an interesting indicator to look at as we progress here through the bull market. Now, on a similar note, you kind of hinted on manipulation earlier. You know, that's a very popular topic among silver bulls, and many want to go immediately to the conspiracy card. You've always taken a more measured and level-headed approach to the idea of manipulation. Share with our listeners your thoughts on that. Do you believe the silver market is manipulated? If so, how prevalent is it, and how great of an impact does it actually have?
Yeah, great question, and it is one, and there's very strong opinions on both sides. First of all, let's stay with the facts. The fact is that the Working Group on Financial Markets exists. Look it up on Google, the Working Group on Financial Markets. It's basically the head, I'll call them, excuse for lack of a better word, head honchos of the SEC, the CFTC, Treasury, head of the Securities and Exchange Commission, the head of the stock exchange. I mean, all the power brokers that exist in the financial markets compose this working group on financial markets. Their edict is they can manipulate markets. Now, they don't use the word manipulate. They can come in and they don't use the control. They use the word that they can come in and buy, sell, do whatever is necessary as they deem fit for management purposes. That's, again, my word, but this is so that the financial markets do not get too over enthusiastic or too big a sell-off, so they can manage things so they don't get out of control. So this is a fact. This exists, and there is no market that's exempt from this. So just by a cursory look at the facts, I mean, someone that spends a half an hour on the internet looking at what I just said can prove to themselves, one, the fact that it exists, and two, that they have carte blanche on any market. So that would highly suggest that they could be in the gold and silver market. Now, my take on the overall manipulation is this. Yes, silver and gold and many, many markets are manipulated. However, specifically to the silver market, the overall trend can't be manipulated. And what I mean by that is that there's enough of a free market left in silver and the commodities, generally speaking, that buying pressure is greater than selling pressure overall, and that the overall price trend is significantly higher now in real terms than it was a decade ago. So the trend is clearly up. The trend cannot be manipulated. However, within the trend, the price can be manipulated from time to time, and it is. There's no reason, for example, what happened on February 29th on the leap year, where silver sold off a substantial amount of silver in a very short period of time, other than to drive the price down. The only thing that causes a price to go up or down in any market is buying pressure or selling pressure. There's more buying pressure than selling pressure. The price rises. There's more selling pressure than buying pressure. The price declines. Well, first of all, if you own silver, why would you want to sell it at a loss? You wouldn't. But since the futures markets and the derivatives markets allow you to profit by a price moving either up or down, there's a profit motive. On top of the profit motive, there's a psychological motive. The psychological motive is if gold is a barometer on the overall health of the U.S. economy, or really better stated, if gold is a barometer of the overall health of the economic system on a global basis, which is really what it is, and silver is gold's poor cousin or poor man's gold, they both react to the uncertainty in the marketplace, especially in the overall economic health. You would have a motive to keep these markets managed. Or when they start running up too high, let them run. And this is typical, especially of silver, where these guys that do know how markets work and do have the ability and authority and at law can manipulate markets, will let it run up. They'll let the last guy get his last nickel in, and then they'll take the market down. And it's very psychologically unsettling, especially for the few at the top that got in at silver at 40, 42, 44, 46, and 48. I mean, some of those people are probably still holding, but they're probably pretty disgusted with the silver market after a year and a half. And this is what happens. So it's as much psychological as it is profit motivated, and that's how I see it. I don't see it any other way. I mean, people say it's conspiracy or it's this or that. Well, you can name it whatever you want. I mean, look at the facts for yourself. Ask yourself, why would anyone want to sell a year's supply of silver in a couple of keystrokes other than to either, one, control the price, two, create a psychological kick in the head, so to speak, or both?
Yeah, excellent answer. And as you mentioned, these sort of things are going to happen, and that's why you got to just hold on to your core position and try to not let the emotion get into it, because it's going to wear you out if you try to time it or try to chase the markets. That's just never going to be a winning proposition. In closing here, I wanted to just address some of the other metals here, platinum and palladium. We are in a currency crisis, and many have said that being the case, just stick with the monetary metals if you're looking to invest in precious metals, that being gold and silver, since platinum and palladium don't necessarily have the same link to money as their cousins do. But both had great years in 2012. Platinum and palladium both outperformed gold slightly, mainly due to supply disruptions in certain parts of the world where it's mined. Do you foresee the platinum group of metals being a good investment going forward for investors? Is that something that people should be considering?
I do. I wrote about it briefly in the Morgan Report for January. It'll be published this upcoming weekend. Briefly, platinum is 30 times rarer than gold, and it is 90% coming out of South Africa, and there's lots of problems in the South African platinum mines right now. So if you got a 90% supply potential with disruptions, and the fact, let's just stick to the facts again, where the platinum mines in South Africa are basically at a push or a loss at the current platinum price, that is pretty clear that the upward price pressure on platinum exists. Palladium is another platinum group metal. Either one, I think, is good. It's hard to call which one will do better than the other. Palladium and platinum can be switched for the auto catalyst application. Platinum has more usage in jewelry than palladium does. So it's a very, very tiny market. I wouldn't put a lot into it. I like, people are worried about confiscation and that kind of thing, and, it's never been any confiscation in the platinum group metals. I mean, it's just such a tiny, tiny market that if you're really concerned. And the other thing I like about platinum is that the ratio is favorable to platinum right now. Since platinum is 30 times rarer than gold, it usually has a premium over gold. Right now it's selling at a discount to gold. I think if you wanted to buy gold cheap, you could buy platinum, and then later on when platinum corrects and goes over gold and sells at a premium once again, you'd be able to take those same platinum coins and trade them for gold. So you'd be buying gold at pretty much a discount, in my view. Now, that presupposes that platinum will sell at a premium over gold at some point in the future, but I believe that's almost a certainty.
It's been, I guess, almost a year and a half now that gold has been priced higher than platinum, and that's certainly an anomaly over history. So that may reverse itself and may present a good buying opportunity for investors. Well, David, thanks very much for your time. We appreciate your insights as always, and we hope you have a happy and prosperous new year, and we look forward to speaking with you again down the road.
Well, very good. Thank you so much for the interview.
That will wrap it up for this week. Don't forget to tune in next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Independent Living Bullion. Thanks for listening, and have a great weekend, everybody.